Hey traders, welcome to Charts and Coffee. Welcome to my office for that matter. Let's get some screens up, shall we? All right. So, we are kicking it off with a look at what's going on in the post hot zone environment. We have two alphabet soup hot zones this week. One is the uh, CPI, the other is the PPI. If you haven't already checked out the economic calendar, one of the first things that we do every week, one of the first things I do every week, and I encourage everyone to do the same because it's very simple. There are a number of free websites that you've probably seen me use and discuss. And, whether that be something like Forex Factory or Trading Economics or ETFDB or Koifin, every single one of these sites has a free service. And that's what I recommend most folks start off with. They're very powerful, important sites. And if you go take a look at, say, Forex Factory, you're going to see at 8:30 a.m. we have the CPI number. Well, CPI, of course, is going to land smack dab on that macroeconomic reality of what is the Federal Reserve likely to do if the inflation ticks up. That's bearish for equities. And if it ticks down, that's bullish, right? And we've been saying for quite a few months in the top tier outlook, which, by the way, is available in the Simpler Trading website. It was updated yesterday. So even if you haven't received the email about the new issue having gone out, check it out. It's in the member dashboard under top tier outlook. And one of the things we've been noting for some time is the Federal Reserve is done hiking, period. Number two, the main conversation now is how soon will they cut? So that's kind of one related topic. The other part of this is looking at the overall equity markets through a bullish prism, mostly around tech, most recently now a little bit more financials, which puts the S&P in place for more upside. And then the last one, which is really the disappointing corner of what we've been looking at for some time, is what's happened to crude oil, what's happened to energy stocks. And it's basically lost its swagger. We have to be able to, as much in real time as possible, acknowledge that a sector, that a commodity is not doing what it A, once was, and B, it's not going to present the same type of opportunities. That's probably the hardest thing for traders to do. I know for me it was. I know that if buying something has been working for months and months, and then all of a sudden the structure of the time frame that I was trading changes, we have to be able to say this is not the same. Might be the same symbol, it's not the same structure, it's not the same setup. The market trend, the behavior, the mood has changed, and that's what's happening in crude oil. So rather than saying, gosh, crude's been so good to me for months, and XLE and Exxon have been just really money in the bank for setups, it's not the same. It's not the same structure. We can't use the same setups. And the discipline to say something has changed enough for me to stop doing something. By the way, gang, what we stop doing is probably the most important thing when it comes to trading. Which indicators do we stop using? Which setups do we stop using? Which market structures do we stop trading? It's the stops in my trading life that have helped me turn the corner. Not the new thing, not the start doing, not the adding, but rather the removing, right? So Pareto principle at work. All right, so that is what we've got here in this post CPI environment, and certainly with a slightly, it's a downtick of a tenth, I believe. Equities are, you can see in the 5-minute time frame over there on the left side of my screen, equities are moving higher. All right. And this goes right back to the swing setup that we discussed last Tuesday. So a week ago today, I pretty much implored everybody to start looking bullishly at the S&P because that was the second most bullish index. By the way, all my cards on the table, we're still in those November 17 QQQ calls. I've scaled out twice. I'm down to my last bit of the position. I'll take this, right? This trade's probably going to come up on 3 to 4x what we originally paid for it last Thursday. Thank you, Powell. That Powell pullback. Stick with the relative performance. And looking at the S&P Right now, um, same thing. So the question is, well, Rog, what do we want to do in the S&P? Same thing that I've been wanting to do uh, every day, and that has been waiting for the daily price movement range, buying calls in the SPY when that happens. Why calls in the SPY? If you take a look at the initial margin requirement on the ES and NQ, they're absolutely bonkers. The NASDAQ initial margin is something over $18,000, I believe. What is the NASDAQ mini? I want to say it's overnight margins 18.5. Overnight margin in the S&P is about 12.3. These are very expensive contracts to hold overnight. So rather than locking up $12,300, how many SPY calls can I buy? And by the way, yes, with enough options, you can replicate the notional value of the futures contract, albeit not the leverage per se, but you can replicate the notional value. It's a fantastic way to take advantage of these moves without necessarily the leverage of the futures, which I'm all for, by the way. I love futures contracts, but the flip side of that leverage is risk, right? If you got a lot of horsepower, you better have some good brakes. So that's what we have right now. And when I open up the charts this morning, we've got an uptrend. We're going to look for the same kind of setups we've been looking at in the NASDAQ. Now the S&P is joining the party, the bullish party. XLF needs to get above 34 and stay above 34. It looks like we're well on our way to doing that. Gang, this is NASDAQ and financials firing on 2 out of 3 of their cylinders. This is where we want to focus our long positions. And by the way, this is not a new message, right? If you've been tuning into Charts and Coffee for any period of time, you know I'm not the naysayer of the market. This is where we look at sector weighting. This is where we look at macroeconomic data. We don't start speculating on what inflation really is. What a waste of time. Reality is going to hurt most traders. This idea that the Federal Reserve, A, doesn't know what they're doing, and inflation's so much worse, and all these other things, I got to tell y'all, gang, and this has hurt a lot of traders this year, and it breaks my heart because I am rooting for retail traders. Quit thinking like Big Short. That's what I tell myself. Rog, that's a movie. It was a cool book. But this idea that we want to be the first there and make these grand proclamations about what's going to happen, that is not our job. We don't have to see into the future. We can just respond to the weighting and the levels on the screen. And that's been working all year, gang. And so if that's something you found, yeah, Rog, I'm not long from last week. You know, what am I doing wrong? Rog, I've been bearish all year long. What is it I need to do? Just look at the price action trade, what you see. And then kind of Michael Burry syndrome is what I like to call it. Don't think you need to be the person making these grand proclamations about whether or not there's going to be a sell-off in the averages or whether it's going to hit a new high for that matter either, right? And I'm looking forward to 2024. If 2023 has been challenging, I've got good news. 2024, right? 2024 is setting up to be what should be an amazing trading year, far better than 2023. And I got to tell you, 2023 was pretty okay. And I'm really looking forward to 2024. The next thing that, oh, George, I like that. The second mouse gets the cheese. Yes, you know, there's nothing wrong with being, I like that. The second mouse, right. There's need to be there first. You know, don't need to be. Don't need to be. All right. So as always, gang, that's where we sit right now. And this is what we want to continue to do. Remember, October has given us the roadmap for likely the last 2 to 3 weeks of December. Where was the October year-end tax loss harvesting in those mutual funds that have an October year-end? And is that likely going to be the roadmap for December? And that's what it's looking like. What was strong and what was weak the last 2 weeks of October. And we're just going to keep plugging away with where the relative outperformance is. And it's working, gang. Please remember, the markets are skewed to the upside if you're focusing on financials, tech, and communications, right? Not with regional banks, not with healthcare. Semis, got to throw semis in there to the upside as well. All right, so let's get to it, gang. As always, the best part of our show are your questions. And yep, all green across the board. D. Bolton. So, you know, my mastery folks, we're going to talk about that last bit of the QQQ. We're going to talk about the last bit of the SMH. And inevitably, you know, some folks are going to ask, Rog, weren't we sort of stalling? Remember, I'm not worried about stalling. Sometimes the market will run and needs to catch its breath. It's okay for the market to sort of catch its breath as long as we're trading above our trailing stop. We never got close to our trailing stops. If we're going to smother trades, higher highs are nearly impossible to capture. One of the most difficult things for traders to accept is that a certain amount of unrealized profit, which isn't ours, right? It's not mine. The P&L that I see of unrealized profit is not my P&L. It's still monopoly money. But if I think of that as the high watermark, if I think of that as my money, then anytime it ticks lower, I'm losing, and losing mindsets. By the way, gang, when we think we're winning, when we're happier, we're something along the lines of 36% smarter. Optimize feeling ahead of the game, right? I don't mean delusionally, but optimize that. You will be smarter. So if I'm thinking that I'm losing when unrealized P&L is evaporating, I'm immediately going to be shifting into a bad gear, right? By the way, I will always tell you when there is a sale. Folks have been asking about hourly price movement ranges, classes, the mastery. This is a great time. I'll tell you what I do, gang. There's a number of subscriptions that I have that I pay for, a number of them. Even though most companies will say, hey, Rog, we'll comp it for you. I always say, look, if my members are going to have to pay for this, I will too. If I'm going to recommend this, I have to pay for this, right? So anyway, what I do is I go back and I start renewing TradingView, right? It's the first thing I'll usually do. I'll re-up TradingView at these nice Black Friday deals. Any of the subscriptions that I pay for, use this time. That's what I'll tell you. And so if you're looking to update your renewal on Sector Secrets Mastery, on HPMRs, I think we have DPMRs as well. Do it now. All right. That's why I just want to mention when there's a sale, I always like to let y'all know. I know, Amelia, I like sales too. Or as I like to jokingly call Black Friday, go broke saving money. But really, how many things can we invest in, like our indicators and classes and masteries, where we can actually get a positive ROI? I don't know that I'm going to get a positive ROI on most things that I buy on Black Friday, but education is always one of them. All right. So SPY take for today. Very likely wanting to be bullish. I have been bullish since last Tuesday, George. The rationale has only gotten better. And I say better because more of the cylinders that matter within the S&P are firing. Not the Dow yet, not the Russell. So my take is going to be, let's get out of its way, wait for a pullback, get long, and stick with trading what we see, not what we think. And remember, gang, in the absence of a long position, the brain starts to think sometimes, well, this has got to be too far. You know how many folks ask me if we were too far, if we've rallied too much, it feels overbought? Feels? Oh boy. Whenever your brain starts saying this is feeling overbought, please walk away from the mouse and keyboard. Whatever the next decision is, it's going to lose money. I don't trade by feel, right? We don't trade by even what we think necessarily. It's what we see. What we see has to map to what we do. So I like the long side, have for, the better part of a week since that video. All right. And by the way, gang, whenever I talk about what I'm doing, I'm going to talk my book, right? I'm not talking analysis and ideas. I'm talking about open positions, setups, and I'm going to talk my book. What are the names of economic news websites? Forex Factory, Trading Economics are two great ones. I would start there. All right, today's payday, says Randy. I had till the 17th on the SMH and the QQQ. I want to ride as long as the quarter is going to keep that little machine going, right? I want to ride this as far as I can, but certainly we won't rule out maybe another scale out, or at least tightening the stop, right? Or at least tightening the stop. All right, Derek, how would I trade a day like today when the market is going up so much in the morning? To the downside? Oh gosh, no. Buy the dip? You bet, Derek. As long as the structure is green, and this could be green on that 1 hour, this could be green on the 5 minute, wherever it's green, I'm going to wait for some sort of pullback. That pullback could be something aggressive, like my least of the hourly price movement range. It could be something aggressive, like the 34 EMA wave. It could be a number of levels that I'm watching that don't need as deep a retracement or a mean reversion. But as long as the the market structure on my multi-trend is green, I'm not even allowed to short, right? I'm not even allowed. All right. How do I like Tesla trading up from the bottom? Tesla is the one stock, Rob, I'll tell you what, I'm nearly uninterested. I'm so uninterested in this stock. The reason I say that is, Rob, some of it's my own bias. I don't like trading Tesla at all. It tends to do its own thing. Take a look at the Magnificent Seven, Rob. Take a look at those 7 stocks. Tesla really shouldn't even belong to them. It's not even magnificent, right? There's a Magnificent 6 right now. So for that matter, if you want to day trade it, if you want to short-term trade it, great. But I could not be less interested in Tesla unless it breaks about 230, right? If it does break 230, at least it's on the bullish side of the 200 exponential. And at least now it's in the bullish hemisphere and it has a chance to start acting like the other 6 in the Magnificent 7. Just keep it short term for now until that break happens. All right. Next up is, would I say that trusting my gut will usually lose money? Dark matter, let's look at it another way. Trusting gut is not even a process. There's no sequence. There's no checklist. There's no way to replicate that. So yes, I am not a fan of people saying, well, I feel. No. I don't ever want to do that. I want to be as sequence driven, as objective, and that's the only way that something's repeatable. All right. Hey there, D. Bolton. Thank you. I appreciate that. I do appreciate that. You know, I try to walk the talk. I do a lot of talking. I try to do a lot of walking too, which is why I emphasize so much, gang, that I don't need someone talking about what they think is going to happen and giving me predictions. I need that like I need a hole in the head. What I want is someone to talk their book. These are my open positions. Because look, if I tell you all right now, watch Tuesday's video and check out my last 3 alerts to my traders. SPY calls, SMH calls, NQ calls. Check out the watch list that we just put out in the Sector Secrets, in the simpler weekly watch list section. Everyone has access to that, I believe. And if you look at that, you'll see what it is that I want to enter, what time frame I want to enter it, the specific symbols that I want to enter. I'm talking my book. Always will. Because you don't need me to tell you what I think, right? Who cares? Rog, what are you doing? And this is where I think it makes the most sense. This is where I believe the everything comes together, which is, all right, Rog, you're long the QQQ. You don't need to tell me you're bullish. Your position says it all, right? Okay, next up, Mark. I had a big special a few months ago. Oh, right, the class. I don't know when we'll have those again. I don't know when that's going to happen again, Mark. It's up to the Trish boss, and we have certain times of year where we'll do different promotions. This is probably the next best one right now, Mark. I do not know the next time I'll be doing a class and so forth. Probably will be for DPMRs or HPMRs. I can't remember. Maybe we'll do a bundle. I don't know. And by the way, the Lorna Bot is working on WPMRs, right? A lot of you are asking, Rog, what about weekly? We're working on it, so stay tuned. But yeah, I would check. Now is probably going to be the best, Mark. Yeah, barring a time I'm doing a class, this is probably the best sale of the year. In my observation of the last few years, this is probably going to be the best deal of the year. All right. Next up is, well, let's jump on over to what's going on with how we on. Oh, I'm all done. I'm out of time. I just want to jump over to bonds before we wrap up. Bond yields are heading higher, gang. So we've talked a lot about when macroeconomics look to be favoring more dovish behavior, messaging, monetary policy, right? Messaging should precede monetary policy. When that's happening, and we're expecting 1 to 2 cuts by the July 31 meeting of next year, yields should be going down, which is to say ZB and TLT are moving up. The 6E should be moving up, which is to say the dollar is moving down. And that's exactly what we've been talking about, pointing to as the way to take the pulse, right? This is how you take the pulse of macroeconomics. Look at bonds, look at euro, weaker dollar, lower yields. That's exactly what we're seeing on the heels of CPI. And when I hop into the rooms later on, we start taking a look at the Fed fund futures. Pretty sure those probabilities for those cuts continue to inch higher. All right, gang, as always, thank you so much for being a part of Charts and Coffee. Time to go caffeinate and dominate. And I will talk with you soon. Same time, same station tomorrow. Be good to each other.